Hey everyone, Matthew Rufh here with the Rufh Real Estate Group for your August 2025 market update. We hope you're enjoying your summertime. It does kind of feel like we're in that lull where it almost feels like we're end of September with the way the weather's been. But nonetheless, we hope you're enjoying your summer with your family, your friends, getting a little bit of sunshine for when we do get it, and enjoying maybe parts of this province, country, or world that wherever your travels have taken you. On the housing front, not much to report in the way of sales. We just had July sales numbers come in, and there was around 1,190 or so units that traded in the month of July. I'm noticing a trend here. May, June, July, we have been very close to, but we have not surpassed 1,200 units that have sold in those 3 months. So we're getting very close to hitting 1,200 units. I don't think we'll see 1,200 sales in August. Here's hoping. But I think we're going to still be under that 1,200 unit threshold for August here. So what does that mean? We are actually seeing a little bit of an uptick on activity with our listings right now. And I think a lot of that has to do with those previous sales I mentioned in May and June, because they now need places to move into for the end of August, perhaps September. So we are seeing a few calls come through on listings that have normally been a little quiet the last few weeks. So I think there's some pressure on people as they may have sold in May, June, as they inch their way closer to a possession of August or September. So we'll follow that and we'll see what our August numbers look like. The Bank of Canada did hold the overnight lending rate yet again. It was a toss-up of what was going to happen here because, as you know, the U.S. and Canada trade talks, they did not go to what we were hoping for. So we are getting those tariffs imposed on us, higher tariffs. And I think the Bank of Canada was watching to sort of see what was going to happen there. I would suspect if we still stay with these higher tariffs, I think the Bank of Canada is going to have some pressure to perhaps lower the overnight lending rate. We won't know until September's meeting. They don't meet in August. So we'll have to see what September does. But a lot of people are really watching to see, what rates are doing, because people think rates go down, home prices go up. That does normally happen. However, we are in a very elevated inventory type market right now. And I was having this conversation with clients last week, and I thought, this would be a great topic to talk about here. If you think the market's going to change between the next 6 to 9 months to even, another year, I would think again, and here's why. 2025 and 2026 respectively, we have a record number of mortgage renewals coming up in Canada. These are the rates that were 1.5 to 1.9% per month, or 1.9 to 1.95% mortgage rates that were given out during COVID. These are all coming up for renewal. And a lot of people are going to have sticker shock when they see 4.5 to 4.75 kind of being what their new rate is. And a lot of people that I've been asking, it's like, yeah, we like our house, but we don't like it that much more that we want to see a payment increase. And those payments won't jump up dramatically, because I have talked to some brokers and the payments don't jump drastically. However, it could lead to the conversation of, hey, let's sell the house now. So if we have elevated inventory here in 2025, and 2026 looks like it's going to be another year of those mortgage renewals, we could see another elevated year of inventory, which, if the buyers are out there and not really making purchases, because as I mentioned, sales are below 1,200 units in the last 3 consecutive months, that's going to be a lot of listings that are going to sit. And the only thing that makes a property move is price, location, and product. And it's typically price that we're seeing things move right now. So it would be a race to the bottom. So if you're thinking of selling your home in the next 6 months to a year, I would say reach out to somebody right away, because even prices we're quoting to clients right now, I'm giving 30 to 45 day price holds where I say, okay, right now the price for your house is this. In 30 to 45 days, I'm probably going to reevaluate it to maybe a little bit lower based on what's on the market. So if you're thinking about downsizing, leaving the province, moving, maybe out of town, I would say get that home on the market sooner than later, because you're likely going to see a lower price if you were to wait 6 months to even a year from now. And our October and November are very active in real estate because we tend to see a lot of listings come off the market that were on the market perhaps from the spring market through the summer, and they've had no luck or no success. So they pull their homes off the market, meaning that's less inventory that you have to compete with. So keep that in mind. I know this has kind of been a long-winded market update, but I wanted to give you guys as much information and ammo as you need, because at the end of the day, your house is most likely your biggest investment. You need to see when is the right time for you, as well as when is the right time for the market. And then we'll decide where you would end up selling for and how much money you're walking away with. So if you have any further questions, please don't hesitate to reach out, send us a DM, reply to this email, and we can set up a game plan for you and help get you moving. Talk to you soon. Bye for now.